Today was another rough day out here for stocks as the S&P 500 from all-time highs down to the low today was right on the verge of entering correction territory. We come over and look at the fear and greed index. We are in extreme fear with a reading of 17. And like a wise man once said, be fearful when others are greedy, be greedy when others are fearful. Now, we really got to ask ourselves this question this time around. With the fear and greed index in extreme fear, we see a lot of selling out there and a lot of people have a bias towards the downside. And we know that there's fear in the market, not only by the fear and greed index, but look at the VIX rocketing up today. However, it did close lower, but it made it to a high of almost 30. So the question is, what does CPI hold for us tomorrow? Well, first, let's jump over and take a look at how the indices fared across the board. The Dow was down 478 points. The NASDAQ was down 32 points. S&P 500 down 42 points, with the Russell 2000 being up 0.1. When we look at advancing issues versus declining, we had 56.9% of issues declining on the day. Then as we come over and look at the sectors, there are only two sectors in the green: basic materials and consumer cyclicals. Now, when we see articles like this, inflation worries resurface even before Trump's ramped up, tariffs on CPI report likely won't ease the angst. Now, when we come over and look at the CPI report, I want to bring your guys' attention. Sampling error in the CPI. They basically give us a heads up that, you know what? Maybe the CPI lie that a lot of people say is in the CPI, maybe that is warranted. Now, if we come over and look at how the CPI has been trending recently, notice the CPI report continues to trend higher and higher and higher. If we look at the area last time that had the highest rise, that was actually fuel and oil. And if we come over and take a look at how crude oil has been doing recently, crude oil has been on the decline down. Look all the way up here, down towards the low. If we were to measure from that high down to the low swing, crude oil has almost dropped 20% from that recent high in the market. So will this actually allow us to produce a better CPI report tomorrow? Let me know your thoughts in the comment section down below. Now, if we come over and look at the Fed watch tool, keep in mind there's 7 days left until the next FOMC meeting. And as we go ahead and we scroll down and we come over and look at the probabilities, we can see that the market is still priced in the next rate cut, not until June. Now, this morning we had a little bit of economic news come out. If we come over and look at what that was, we had the JOLTS job openings come out, 7.74 million, which is a little bit higher than expected. Now, if we come over and we look at the chart real quick, and I'm going to bring this over and put this on a 1 minute chart to illustrate this for you. But we come right over here. Here's where the report essentially came out. The market spiked down, wicked up, and then came crashing down. And that was thanks to this news article right here coming out. Trump announces double tariff on Canadian steel and aluminum. When that came out, we saw the market come crashing lower. So again, not only do we have to navigate the CPI data and such coming out, but we also have to worry about tariff talks. Now, as we come over and look at the dollar index today, dollar index once again on the move lower, continues to grind lower. We look at Bitcoin though, Bitcoin bouncing up here a little bit. Tesla, after getting decimated yesterday, Tesla on the rise up today as well, up $8.43. We take a look at Apple. Apple today was down $6.64. We take a look at Meta. Meta today was up $7.72. We look at Google. Google today was down $1.83. So we got to wonder, are we getting close to a tradable bottom in this market? Or are we going to continue to grind lower? And I think tomorrow's news is going to hold a lot of clues for that. We come over and take a look at gold. Gold, once again, having a push up. Gold up 24 points on the session. Now, I've been hoping we're going to get this ABC pattern on the way down. However, the pattern is not validated unless we break below the swing point right down here at a price point of 2,844. And if we break above this swing point right up here, watch out, we'll probably see gold running to new all-time highs. Now, as we come over and look at the Dow Jones real quick, we need to go ahead and adjust our Fibonacci retracement levels as the Dow did come down and break the low from yesterday. Dow today was down 1.13%. As we look at the MACD indicator, it still looks horrible at this moment. It's showing no signs of firming up on the daily chart. On the 4-hour chart, still looks horrible, no signs of firming up either. Then as we jump over and take a look at the small caps, the Russell 2000 today, basically forming a spinning top type of candle right at that ABC pattern completion to the downside. However, momentum is still favoring downside pressure as the MACD indicator is still crossed to the downside. On the 4-hour chart, MACD indicator is starting to flatten out here just a bit. So we'll see if this indeed could be a buying opportunity in this market. I want to remind everybody there's only 2 days left to take advantage of Apex's 80% sale off all their evaluation accounts, pass in as little as 1 day. And if you want to take advantage of this offer, use the link in the description box down below and use promo code Mike at checkout. Now, when we come over and start looking at the SPY real quick, SPY, Notice we came down, made a new low once again today, and the MACD indicator continues to get uglier and uglier by the day. Now, when we do finally start to get a bounce in this market, the 38% retracement is going to be an area of interest. But if tomorrow we see us essentially going down, making another new low, then we're going to have to grab the Fibonacci retracement level and essentially move it a bit lower. Now, I will say this is quite a steep move down without a retracement on the way up. At some point, we're going to see a short cover and rally, and that could be exactly what takes us towards the 38% retracement. If we look left over here just a bit, notice that 38% retracement is right around this prior swing point that we essentially broke down from, and we'll see if we can come back and retest those areas. On the 4-hour chart, MACD indicator still looks horrible, but I want you guys to focus on this last 4-hour candle. You can see we have the wick on the top. You might say, Mike, this is bearish. Well, maybe not. This is more of a warning type of candle that just maybe we're getting ready to get a reversal on the way back up. If this candle was essentially located up in this area, I would agree it was bearish. But since this is located in the context of a downtrend, quite often this will be part of a reversal pattern. What we'll see quite often, maybe tomorrow we wick down below it when that CPI data comes out, we come right back up, and then we start to get that tradable bottom on the way back up. On the 30-minute chart, MACD indicator is crossed to the upside, and we're going to see if we can continue to firm up from these areas. Today's profile, kind of a D as in dog shape profile, which indicates tomorrow is likely going to be a breakout or breakdown from this pattern. And since we're down roughly 10% at this moment, I think it's highly probable we'll start to see that turn and bounce on the way back up. Now, the question is, do we flush the low before that takes place? As we come over and look at the futures markets real quick, we jump over and take a look at the S&P on the 4-hour chart. We can see we broke the low out here from earlier this week. We've now had a 223 point range. And again, we have that similar candle that we just saw out there on the SPY. Now, as we look at this, what am I anticipating moving forward? One of the targets to the upside would be this high volume node. That's something we talked about in this morning's video as well. And if we can clear that area, maybe we can start working our way up towards this next high volume area, somewhere in the ballpark of about 57.65. However, when we start coming over and start looking at the daily chart, we have a D as in dog shape profile, but quite a wide range for a D-shaped profile, 117 points. But essentially, all we did today was consolidate back and forth. Yes, the range was wide, which gave us a lot of trading opportunities. We made it down to the S1 pivot, rejected. And now as we look, value area low is going to be 5567.50. The point of control is going to be up here at 5598.50. And value area high is going to be up here at 5623.50. So the rule behind this with a D-shaped profile, whichever way we first break, quite often ends up being nothing more than a trap. So let's see, do we come down and start breaking value area low and maybe even challenging the lows from today, and then go ahead and firm up for that move on up higher? Now, if indeed we do break below value area, if we do break below the low and we start coming back up, depending on how aggressive of a trader you are, if we start breaking back above the low, then we can look for a push back up, targeting value area low, point of control, value area high. Then I'd want to turn my attention kind of towards this area of the profile right over here from the prior day. And that also correlates when we look left, right near this swing point over here. So I'm going to go ahead and zone this out. Candle wick to the candle body, and that zone is going to come in anywhere from 56.72 to about 56.88. Now today, we did have this news come out at about 1:58 p.m. U.S. State Department, Ukraine expressed readiness to accept the U.S. proposal to enact an immediate and interim 30-day ceasefire. Now, luckily for me, when that news came out, I happened to just get into that trade. Boom, rocket on the whip. You might say, Mike, you photoshopped that. I would encourage you guys to go back and watch it on the stream. And after that 40-point move on the NASDAQ, I said, you know what? Stream is over. And I took that trade right after we gave away the 50K Take Profit Trader account. If you guys don't want to miss the next time I go live, make sure you subscribe and you have the bell notifications turned on for all. We're going to be giving away another Take Profit 50K account this week. Now, we come over and look at the QQQs real quick. Notice the Qs today made another low. So again, we have to go ahead and adjust that Fibonacci retracement. But I do want to remind you guys still, we have that weekly target down here a little bit lower off that double top. That comes in about 458.78. And you know what? We're not that far away. So will the CPI report tomorrow flush us down towards that double top target? And then that's when we start to get a turn in this market. The weekly MACD indicator still looks horrible. MACD indicator on the daily chart still looks horrible. On the 4-hour chart, we're starting to see a little bit of a flattening out effect of the MACD indicator. But then as we start looking at the 30-minute chart, we did get a bullish cross on the way up. We have a D as in dog shape profile. But again, remember, be on the lookout for the trap tomorrow. The first way we break, quite often ends up being a trap. So I'd love to see the NASDAQ come down, flush out this low, and then go ahead and rally on the way back up. Keep in mind, we have two gaps once this short squeeze gets underway. 491.91, and then the next one up here at about 502.10. As we come over and start looking at the futures markets real quick, notice, all right, we're having a hard time getting above this high volume area. But if we do, the next stop I want to focus on is going to be the next high volume node at about 19,852. Then we'll see if we can make our way up here towards this volume area of the profile. So what I want to be on the lookout for tomorrow is, can we flush below this lower level consolidation and then potentially spike back up? Keep in mind, tomorrow's price movement is a lot going to be dictated by that news that we have coming out at 8:30 a.m., the CPI data being released. After that, basically no economic news. We have the federal budget balance at 2 p.m. Expect to be low impact. And then on Thursday, we also have the PPI data coming out. And then on Friday, we do have preliminary consumer sentiment, followed by preliminary inflation expectations. So as we jump over and start looking at the daily profiles out here for the NASDAQ, one of the targets that we talked about on the live stream, which look what the NASDAQ did. We came right down here, boom, we tagged the 100% level, 19,677. We were able to take out the P point and the ABC pattern. So now as we look at this, what am I expecting moving forward? Well, if we look at the volume profile levels, value area low will come in at 19,353 and a quarter. The point of control will be up here at 19,465.75 with value area high coming in at 19,567.25. Again, I'm looking to see which way do we first break. Do we break below value area low and then potentially come back up? Ideally, I'd like to see this afternoon low or even the low of the session broken and then go ahead and rally back up. And you know what? The catalyst for tomorrow could be the CPI data. That could be the catalyst that actually sets the trap. So tomorrow we want to be vigilant to make sure we're not the ones stuck in the trap. Now, if you guys want to see which prop firm has the best payout policy, then make sure to watch this next video right here.